Right now, as I'm looking at the live charts for Quantum eMotion Corp, ticker symbol QNC on the TSX Venture Exchange, the stock is trading at $3.29 Canadian, showing some significant intraday volatility with a push-up of over 11% earlier in the session before consolidating. If you are watching this, you probably expect me to tell you that this is just another microcap tech play riding the coattails of the AI boom. The expectation out there, if you browse the forums or listen to the casual chatter, is that this is a standard pump scenario, where a small company announces a buzzword-filled partnership to spike the volume. But the reality is far more uncomfortable and, frankly, much more interesting. What we are seeing today isn't just a reaction to a press release. It is a fundamental pricing in of a technological shift that most of the market hasn't actually done the math on yet. The reality is that Quantum eMotion isn't just signing a deal. They are effectively embedding themselves into the physical silicon layer of the next generation of AI infrastructure. And the market is only just now waking up to the fact that their technology, Electron tunneling, is the only scalable solution for the specific problem Exascale Labs is trying to solve. While everyone else is looking at the stock price and wondering if they missed the boat, we need to look at the plumbing of the internet itself. So grab your coffee, sit down, and let's walk through this. I want to break down exactly what is happening with Quantum eMotion Corp, because if you don't understand the difference between their electron tunneling tech and the photon-based systems used by their competitors, you are essentially flying blind in this trade. First, let's address the elephant in the room, the Exascale Labs partnership. The headline expectation was simple. Small-cap crypto security firm partners with AI infrastructure company. That's how the algorithm reads it. That's how the headline scanners see it. But the reality is that this partnership validates the one thesis bears have been using against QNC for years, the idea that their tech couldn't be commercialized at scale. Exascale Labs isn't building simple server racks. They're building high-density, GPU-heavy compute clusters designed for the massive workloads of generative AI. These systems generate insane amounts of heat and data throughput. The expectation was that they would use standard software-based security. The reality is that software security is dead the moment a functional quantum computer comes online. Exascale knows this. They aren't integrating QNC's tech because it sounds cool. They're doing it because they need a hardware-based entropy source that can be printed directly onto the circuit boards without taking up valuable real estate or consuming excess power. This brings us to the core of the thesis: electron tunneling versus photonics. Most of the smart money in the quantum space has been chasing photonics. Companies like ID Quantique have built incredible machines that use lasers and mirrors to split photons and generate random numbers. It works. It's secure. But here is the problem, and here is where QNC wins. Photonics requires optical components. You need a light source. You need a detector. You need space. You cannot easily shrink a laser bench down to the size of a microscopic transistor on a standard CMOS chip without massive cost and complexity. QNC's patent portfolio covers electron tunneling. Imagine a wall. In the classical world, if you throw a tennis ball at a brick wall, it bounces back 100% of the time. But in the quantum world, if you throw an electron at a barrier, there is a tiny, statistically non-zero probability that it will just appear on the other side. It doesn't break the wall, it doesn't climb over it, it tunnels through. This event, the moment the electron appears on the other side, is fundamentally, truly random. It is unpredictable by any known law of physics. It is nature rolling the dice. QNC has figured out how to build a simple, standard semiconductor junction, essentially a broken transistor, that forces this electron tunneling effect to happen, and then they measured the current that flows through. Why does this matter for your portfolio? Because this structure is CMOS-compatible. That is the magic phrase. It means QNC's technology can be manufactured using the exact same machines, the exact same silicon wafers, and the exact same supply chains that Intel, TSMC, and Samsung use to make the chips in your phone and laptop. They don't need a special laser factory. They just need a standard chip foundry. This is the reality that exceeds the expectation. The market expects a niche hardware product. Reality delivers a scalable IP licensing play that can be copy-pasted into billions of devices. Now, I want you to pause for a second. Comment below how many shares of Quantum eMotion Corp you currently hold, or if you are looking to enter at these levels. I'm genuinely curious to see if the retail sentiment is shifting from quick flip to long-term hold given this new data. Let's shift gears to the recent price action and the technical side of things, but not the lines on the chart, the technicals of the business. We have seen QNC stock moving aggressively, and a lot of that is tied to the SoFi Invest crowd and the Robinhood app users waking up to the quantum security narrative. But look at the volume. It's not just retail. When you see a stock hold the $3 plus level after a run-up of this magnitude, it tells you that the paper hands have largely exited. The recent financials give us a clue as to why. The company just reported a cash position of roughly $24.7 million. Now, for a company of this size, that is a fortress balance sheet. But where did that capital come from? A large chunk came from warrant exercises. Here is the tension between expectation and reality again. Expectation: warrant exercises are bad. They dilute the stock and create selling pressure. Reality: warrant exercises mean that smart holders, people who have been in this stock for a long time, are willing to put more capital in to convert their paper into common shares at a higher price. They aren't cashing out. They're doubling down. They're converting because they believe the underlying asset is worth significantly more than the exercise price, and they want to own the voting shares. That $24.7 million gives QNC a runway that their competitors can only dream of. It means they don't need to go to the market with a desperate private placement next week. They can fund the Exascale pilot program. They can open their U.S. subsidiary, and they can aggressively protect their IP without sweating payroll. Let's talk about the broader market context. You have NVIDIA stock essentially carrying the entire S&P 500 on its back, driven by the insatiable demand for AI compute. But the dirty secret of the AI industry is that the data being processed is incredibly sensitive. We're talking about medical records, financial modeling for Schwab Intelligent Portfolios, proprietary defense algorithms, and personal biometric data. Current encryption standards, RSA, ECC, are based on math problems, factoring large prime numbers. They're hard to solve, but not impossible. A sufficiently powerful quantum computer, which is what companies like IBM and Google are racing to build, will slice through that encryption like a hot knife through butter. This is the Y2Q moment, the year to quantum. When that happens, every single online investment platform, every fidelity trading platform, and every interactive broker's account, and every SoFi robo-advisor becomes vulnerable. The entire digital trust architecture collapses unless the keys used to lock that data are generated using true quantum randomness. That is what QNC sells. They sell the unhackable key. If you are using Fidelity Investments or managing your Fidelity IRAs, you assume that the SSL encryption protecting your login is secure. And today it is. But the data you transmit today is being harvested by bad actors now, stored on massive servers and saved for the day, 5-10 years from now, when they have a quantum computer to decrypt it. This is called store now, decrypt later. QNC's partnership with Exascale Labs is a direct countermeasure to this. By embedding the QRNG directly into the AI compute cluster, Exascale is ensuring that the data generated today is protected by keys that even a future quantum computer cannot predict. This is why the Tesla stock bulls and the Apple stock watchers should be paying attention to the microcap space. The big boys are going to need this tech. Apple has already started integrating post-quantum cryptography protocols into iMessage. The industry is moving. QNC is just sitting there with the patent on the most efficient way to generate the randomness needed to fuel those protocols. Now, let's look at the risks, because I would be doing you a disservice if I didn't play devil's advocate. The expectation is